Dear participants, I would like to welcome you to Arco Vara webinar. Today's webinar is hosted by CEO Mr. Tarmo Sild. Mr. Sild will introduce and comment the financial results of 2013 and give further insight about plans for 2014. You have the opportunity to ask questions during and after the presentation. Pre-sent questions will be answered straight after the presentation. You will then have the chance to ask further questions. Please write the questions in the chat box on your right-hand side and I will read them on your behalf. If you have any technical difficulties, please let us know by writing in that same chat box. I will now hand it over to Mr. Tarmo Sild.
Hello everybody. I see that we have already 6 participants and I could almost start speaking Estonian, but we also have international company here, so we continue in English as promised. And on the front page, I just want to share with you a snapshot which is made the day before yesterday of our pending construction in Sofia, where you can see we are finishing the rough structure of 6 floors. There is 2 more to go. And the size which you see on this photo is roughly half of the phase 2 total construction size. Also, it gives you some idea what the future phase 3 will look like. Phase 3 has approximately the size of half of phase 2, meaning that what you see on this photo is roughly also what phase 3 will look like. Phase 2 is 2 times bigger than the photo here. Now, if we proceed to our key figures, then in very short, last year has been a turnaround year for Arco Vara in terms that we have stabilized the company. We have stabilized it down to the level where I think it is sustainable. On the other hand, it's also on the minimum level necessary for continuing as property developer. As you can see, our revenues have been falling to the level of 40 million euros, and this is because we finished our pending constructions and there are no more construction works coming into our construction division. And the rest of the number is consisting of revenue from our services division, which is slowly growing, and I expect also some growth during this year. But as for development, the number 14 only demonstrates what happens if you sell out the existing stock and nothing is upcoming. There is a gap in the production, which I have notified also before in our quarterly announcements. So this gap in a way is going to demonstrate itself also during this year, and only because of the preparations we started last year and this year, I expect the revenue to start to increase slowly from developments again in year 2015. Now, as for gross profit and net profit lines, you can just see quite interestingly that last year our gross profit and net profit were equal. That does not mean that we did not have any interest cost or general cost. It only shows that the net profit, the bottom line, absolute bottom line, looks so good because we reversed the provisions. The provisions we created in the beginning of last year were roughly 3 million euros. 1 million for our possible losses in Tivoli project and 2 million roughly in our possible losses in After 3 project. Since we managed to exit these projects quite successfully without losses and with small positive cash flow, we also were able to reverse these provisions. Without the provisions, the net profit line will be somewhere around 500,000 euros, the same number as we predict for this year. If we look at the cash line, then also the numbers show that there is a decline But I should also tell you that the cash in accounting terms does not mean free cash, which one could use for immediate purchase of something or paying of something. Amount of the cash which we see at the balance sheet at the end of last year, or at the end of 2012, was actually cash on the blocked account and related to either the blocked apartment sales in Bulgaria. If you remember, we were not able to deliver finished apartments to customers because we had some pending disputes with the bank. And also because we had significant amounts blocked in relation to the construction operations, pending construction contracts, which had to be finished first in order to get released of respective performance guarantees. So all in all, I should say that the cash position, despite difference in numbers, the cash position which you feel as a manager company has not changed significantly over past year. Now, if we look at the inventories and real estate investments, then we the only thing where I would like to draw your attention is the difference in real estate investments. End of 2012, it was 40 million. End of 13, it was 11.3 million. The biggest difference comes from sale of Pärnu Market, which was a cash flow project and where we could use the revenues for repayment of some liabilities and also for stabilization of situation in Bulgaria. And also asset-wise, there is some decline. This is related again to sale of Pärnu Turg and also sale and delivery of finished apartments last year in Bulgaria. Also, we sold out our last apartments in Estonia, so we are out of stock currently. And we also had some sale in Latvia. And as for net debt, the company has gone down to the level of 40 million euros. Out of this 40 million euros, roughly 12.5 million euros are related to real estate investments in Madrid building, in Madrid project in Sofia. Madrid project in Sofia, in great extent, is accounted as real estate investment. Some parts of it, though, are also counted as inventories. So you should not make a conclusion that the value of real estate investments or the Madrid building is less than the outstanding loan. Actually, this is also a response to a question which I received beforehand, before the webinar. Madrid project still contains some little equity. But yes, the position there as to its liabilities and asset value is quite equal. Now, the next slide, a very short summary what we did last year. We started the year with asset evaluation and creating of provisions, as I mentioned, for Tivoli project and for Ahtre 3 project. We had to restructure the Bulgarian assets, which were in the beginning of the year hopelessly bundled together, meaning our Madrid project in Sofia city center, which is a mixed purpose building of apartments, retail space and office space and parking places underground. It was hopelessly bundled with our Monastyrsky project, which is something like block apartments in a sleeping area of the city. And restructure means that we separated the assets. Success or failure in one project does not in any way implicate success or failure in other projects. The liabilities are not interrelated. And in fact, we see that our Monastyrsky project is progressing well, and we are also making efforts to further stabilize the Madrid project. We had to exit from Tivoli project, again, retrospective view, given that Arco Vara had issued a guarantee to the investor loan, and the investor loan was bearing an interest which was higher than 10% a year, and given that the loan amount was kind of growing, the interest was capitalized on current basis, it meant that actually the debt or liability in Tivoli was increasing by almost 1 million euros a year. And if the construction and sales does not follow very quickly, and indeed this project was not a smooth one for us in terms of construction and also in terms of overall performance, it was comparable to Arco Vara's head put into a basket filled with water. And it was just a situation where you had to reverse out and have maintain self-discipline and not to push on. And I must also note that we have not seen progress in Tivoli even since then after our exit. As for AFTRI 3, it is a nice land plot in Tallinn city center, but it was also burdened with more than 12 million euros bank loan, and there were also issues related to detailed planning and possibility to make efficient, smooth progress with the allowed construction volumes there. And eventually, after several litigations and efforts to find a solution, a peaceful solution was found. My compliments to the bank, my compliments to our former partner there. Eventually we exited and cleaned our balance sheet, and now we are allowed to look into the future. I already mentioned sale of Pärnu Turg. Again, maintaining a cash flow property outside Tallinn is not our, in Estonia, is not our core activity. We would rather like to concentrate on residential developments, and sale was successful and helped to stabilize the group and generated profit and also positive cash flow, one-time positive cash flow. We had to finish all works by Arco Ehitus, also an issue which was mentioned 1 year ago in the webinar. It was important to finish all the works for the reputation of the group, also because the group had issued performance guarantees to the customers of these construction works, and we the best possible outcome was to finish the construction works without significant losses. As of today, Arco Ehitus has changed its name. It's sold out of the group. It does not mean that Arco Vara will not construct in future, but I am convinced that we will not focus on construction in sectors which we don't know very well. We are real estate developers, not pipe or public infrastructure builders. And also on the more positive side, future-looking side, since we saw that there is a gap in the production cycle, as we have told before, real estate development is a long-term production process. It would last at least 4 years from the moment of acquisition of land without construction rights until delivery of finished apartments to happy customers. So with many things, we were just sold out the stock, but we were not in a production phase where we could immediately launch construction. We used every possibility to launch construction, and we used also every possibility to acquire a good land bank for future developments. We acquired land bank in Tallinn Paldiski Road with the possibility to construct 300 or more apartments. The district is very nice. It's close to a beach. It's close to park forest. It's also close to Rocca al Mare, all kind of facilities there, shopping and free time leisure facilities. We also commenced construction of Sofia Monastirsky 2, which was a result of successful restructure of Bulgarian assets. In this connection, we were also successful in raising we did a 750,000 euro bond issue, which was supported also by Arco Vara shareholders. And this allowed us to commence construction. And I already showed you a photo how the construction is progressing. As of today, we have pre-sales, meaning sales in writing with some prepayment. Pre-sales is exceeding 35% as of today. And we are also ahead of our construction schedule. We also recommenced construction of apartments in Riga in our Pišomuise 1 project. In the beginning of year, we had 28 units left there to finish. We finished first the 14 units. Out of these today are only 2 unsold. And a couple of months ago, we also commenced the finishing works of the last 14 units. And I expect all these units to be sold out by end of this year. And finally, also keyword which I mentioned 1 year ago, we have to build the integrated production cycle and the team, meaning that we have to make full use of the data and the data bank in the hands of our brokers and evaluators. We also have to make full use of information that we gather from construction prices, and various technologies which we apply in different countries, and so on. So we have started with that. It's a work in progress, certainly not finished, but I am happy that we have taken the first steps, and these already start bearing the fruits, because all the positive steps which I described here, acquisition of land bank or commencement of some construction here and there, is a result of team effort and very well advanced planned business plan. Okay, as for our active assets, to go through what is in the balance sheet, most interesting items. Paldiski Road 70C land bank right now in detail planning, and I hope that we will finish it by beginning of next year at the latest. Liimi Street 1B is a land plot belonging to us, again under detailed planning, future commercial, not commercial, sorry, but office center or business process outsourcing facility. Lehiku Street 23 is a land plot with future construction rights for so-called city villas. We have also some other land plots in Tallinn, in Viimsi, in Saue, Harku and Tartu municipalities, and we are looking how to turn them into some products as soon as possible, or replace or exchange them against something else which could be put into production process soon. And we also in Estonia continue actively seeking additions to our land bank. In Latvia, we have still a stock of 16 apartments. We expect to finish the construction by end of first half and sell them all out by end of this year. We also still have some finished residential land plots near Riga, finished meaning fully developed, having roads, electricity, street lighting. And we also have 68 plots in reserve in the land bank if we eventually finish selling of these 23. I should still say that Riga real estate market, at least for local residents, is still much slower as compared to Estonia so far. And also in Latvia, we need to acquire land bank for future developments, and we have ideas for that. Now Bulgaria, Monastirsky phase 2 already covered in this webinar. Phase 3, as I told, it's approximately half of the size of phase 2. The land plot belongs to us. The underground construction is finished, belongs to us, and it's ready for immediate construction above grade. And I think continuing of phase 2 will actually depend only on progress of phase 2. I am not ready to share with you when we have decided to commence phase 3, but certainly there is a moment in time when we see some pre-sales progress, and it's possible that we decide to continue smoothly, seamlessly also with phase 3. As for Sofia Madrid Boulevard apartment house or mixed purpose house, then this really is a mixed purpose house and needs further efforts. Meaning that the leasable or lettable area is almost fully occupied. It's serving us well. It's providing positive cash flow, which is sufficient to cover all kind of costs, also interest cost, and also to even to reduce some outstanding principal loan amount. But the house is also containing a stock of 33 unsold apartments. These apartments were planned, laid out, designed at different times as compared to what the market demands now. And in these terms, the challenge here is to make these apartments also suitable for the market. We have ideas and also practical implementation in that direction. We actually have converted 11 of these apartments already into finished, fully furnished ones, which are offered for short or long-term rental. The occupancy rates are pretty good, and actually this model in small scale has demonstrated that it can be sustainable on its own. The issue is that we still have 22 units left passively standing as black boxes. And I should also say that the group is not interested in investing into these apartments to make them cash flow property unless we got the pending Madrid loan restructured. The pending loan on Madrid building is becomes fully mature by end of June next year, very soon. And there is also a schedule of principal repayments which started January this year, and we have not fulfilled that schedule. We are actually in a situation of default of these repayments already now. And we are having negotiations with the bank either to become to result where we have long-term sustainable investment loan, not a short-term construction loan, which was initial project. And if we make it long-term, then I think we have also found a way out. If agreement with the bank will not be reached, then I'm afraid it's gonna be a matter of eventually losing this property. But again, I should reiterate in this context that Madrid project is not linked to any other important assets of Arco Vara anywhere else. And also I am optimistic that we can find an agreement with the financing bank, but the time will tell. Also on our asset sheet is the service division, and this consists of people and of the market data. Market data is very important to put ourselves rightly onto the maps of our markets, onto the map of Tallinn, Riga, and Sofia, to see how these cities are growing, what type of apartments and other properties people look for, what they can afford, what is financed by the banks, and also what are the realistic sales periods and marketing methods. And I think this is very crucial in getting a competitive edge over simple developers or construction companies who try to enter the development market or have entered much success to them. But I think one of our key advantages is the people and data in the actual marketing of all kinds of properties. And as you see, we have significant teams in every country. Estonia covering Tallinn and many locations, Latvia covering Riga, and 5 other smaller municipalities. Bulgaria, we have a big office only in Sofia. And you also see the number of active properties for sale. These numbers is replenished, meaning sold out and replaced with new mandates, new properties. The turnover is, let's say, 1 year or even less. Now, as to the vision for future, the vision is that we keep and expand our service division for the purpose of market touch and market data. And we also restart development division, meaning we close the production gap and we go on with residential developments in all our markets. And with every new project, the target and also the key for this deciding whether we enter the project or not is expected return on equity, which is 20% per year. If we look at the markets in general, or what is the potential, then I just wanted to share with you one graph which shows the division of residences in different European countries, where you can see that each column depicts one individual country. There is a column for Bulgaria, also a column for Latvia, column for Estonia. In each column, the blue color depicts properties which belong to people and which do not have mortgage on them. The red color depicts properties, share of properties, which belong to people but which are mortgaged or subject to any other type of loan. Green color depicts tenants, rental properties, people who live in rental properties. And then finally, there is also a share for so-called social apartments or any other kind of apartment which statistically do not fall under any of the previous categories. And this is data from the European Bank of Reconstruction and Development. And what is interesting on this chart, it shows us the difference between the so-called old Europe and new Europe or Central Eastern part of the Europe. The borderline is somewhere by Italy and Spain, where we see that on the right hand of the chart, around 40% or even less people live in their own home. And the biggest share of people live in the red part of the column, meaning they have a mortgage. Whereas in the Eastern Europe, we see that the vast majority of people live in their own home. We also know why. It is because during Soviet times, most of the residential properties were developed in Soviet times. And these properties were then privatized. And then slowly, according to new developments, which mostly are acquired by people with bank financing, the new developments have started to increase their share, and we also see then the development of this mortgage part. This, of course, is very, very rough picture, but it gives you some kind of idea what would happen if we will have time over the next years, peaceful time, to continue developing and giving people affordable new products. I think we will catch up the so-called old Europe, and part of the old Soviet type of properties will be converted into new properties, mostly acquired by the mortgage. And the difference is, as you see, in old Europe, own properties 40, properties together with mortgage 70% or more. And in Estonia, we have roughly almost 70% own property, but already like 15-20% with mortgage. In Latvia, we have even less share for mortgage. Bulgaria, you see that there is the market is not very developed, and still there is mostly old Soviet type of properties. In the long run, this shows us the future or the amount of properties which will be eventually converted into something new, either developed as brand new or converted renovated into something new. Our key markets, so today, Estonia, Latvia, Bulgaria, all demonstrate good potential. As for the principal challenge for this year, besides continuing the pending processes of constructing and detailed planning in Estonia, the crucial issue is to raise share capital during this year. Certainly the company has a plan B in case it has to manage with the current assets and the current asset structure. But as you see by yourselves, now is the time to take the next step and increase the asset base with share cash. This will allow us to enter into new projects. We have several good candidates with a target return on equity of 20% a year. They are all focused on residential developments. And the question is how quickly, how much we will succeed in raising the share capital. But this is the key to make the wheel turn around faster. So with this comment, I would like to end my presentation. I thank you for your attention, and now I am ready to take on your questions. Thank you.
I will now read the pre-sent questions one by one, but I would like to remind you that if you have any questions, then you can use the chat window on your right-hand side. So the first question that actually consists of 3 separate questions is: among the bigger development projects of Arco Vara, we can find only the development project on Paldiski Road. Firstly, do you have any plans about buying additional property in the foreseeable future?
The answer is yes.
Secondly, how would you comment the price level of property that is ready to be developed?
If I understand the question correctly, one means land plot which already has construction rights and could immediately be finished with construction and offered to the market. Well, right now in different countries, the situation is different. In Estonia, the market seems to be very hot. Seems there are very many small developers who are rushing to the market and try to offer their own 14, 20, 30 apartment product. And this reflects also in the land prices, meaning the land with construction right, land with detailed plan. Also, as regards Estonia, I would like to comment that there is a big difference in the construction prices, even though I understand that construction standards can be somewhat different between, for instance, Estonia and Bulgaria. Still, it is significant that in Bulgaria we succeed in constructing above grade for 250 euros per square meter net. And in Estonia, one speaks of prices above grade, which are starting from 700 or even 1,000. 1,000 is a common, which I have heard in recent times. And if we start digging in various production or construction inputs, it seems that also there is a significant change in pricing of cement and construction machinery, etc. And I am a bit afraid that the Estonian market is overheating again unless we calm it down by working efficiently and bringing also to the market affordable products. I am not convinced that the future, the near-time future of Estonian, or let's say Tallinn market, will be of selling apartments where the prices start from 1,800 euros per square meter. I am not convinced that this is the future, or that people actually are able to catch up. But in the long run, they should be able to catch up in order to avoid physical amortization of the current stock. Now, as to Latvia, then situation is different. Latvia still has a lot of toxic assets in the bank's portfolio, and the market is not so hot, with the exception, of course, of Jurmala. But this is a different case, different segment of customers. And also, I am not able to predict how long it will last. As for Bulgaria, then this is the most peaceful market in terms that there is demand, but there is also some steady supply. And with our Monastirski development, I could also see that if you offer affordable products, it's not a problem to sell apartments very quickly and even have a little queue of interested people. So that's my general comment.
And the last part of the first question is, would it be profitable at all to start new bigger development projects, considering the price of land plots and costs of construction?
I think yes. And the reason is that, number one, you have to distinguish between small developments and big developments where you offer all kind of added values. If you squeeze a small development into somewhere, into some location which value is disputable, then of course the only thing you sell to customer is the apartment, the perimeter itself. Now, if you take some large area and you can link it easily to seashore or to some shopping centers, public transport facilities, maybe you bring in some facilities into your own development project. You also can play with parking, children's playground, in one word, everything which makes a living environment. Then you can make added value with this, and that's one difference why it could be profitable. Second difference is that as with construction price, again, if one uses standardized solutions and one uses the economies of scale, then I believe personally that the construction price can eventually be cheaper than the numbers which are offered today. And actually, we are working right now very closely with our Bulgarian colleagues to find out what could be done differently in Estonia, or where perhaps we are not trying hard enough in Estonia, and the market runs along to certain direction without maybe thinking sufficiently whether this direction of pricing is sustainable or not. So I think the key is in offering complex living environments. The key is in economy of scale, and also I would say that in big developments, the freedom which you can have in planning is different as compared to small squeezed in solutions into some region. Thank you.
Thank you. We can now move on with the second question. Actually, the first part of the second question is already answered, but I will still read out the full question. If and when are you planning to arrange additional share issue, and how do you plan to use the raised funds?
If, and I repeat, if there will be a share issue, then the funds will be used mostly in Estonia and in Latvia, and for developing new projects which are in the pipeline but not acquired today.
Okay, and now moving on to the third question, which is also the last present question. According to the most recent report, the scheduled loan payments of MADRID projects in Bulgaria are pending, and there are ongoing negotiations with the bank to restructure the loan. Could the MADRID project be rather seen as a burden to Arco Vara, or is there still a possibility to earn a profit?
There is possibility to earn a profit, certainly. As I told before, the building consists of two parts. Today's lettable part is occupied, producing cash flow, and I think every investor would like it. The yields are nice. The issue is what to do with the stock of existing apartments and which require investments to turn them into something which produces cash flow. And we are having negotiations. I expect that we get to a solution during this year, but I will not comment on this more today.
Thank you. Does anybody have any additional questions? If so, then you can still use the chat possibility to ask. If you don't at the moment, then I'm sure that Mr. Tarmo Sild is ready to answer also afterwards to your questions. If there are no more questions at the moment, then we would like to thank you for your participation. And I would also like to mention that both the presentation and the recording of the webinar will be available to all via stock exchange announcement. Thank you and have a nice day.
Thank you.